Hey, business owners and entrepreneurs. Today I want to talk about the Augusta Rule and how you as a business owner can leverage this strategy to potentially save thousands of dollars. I'm sure you guys have probably heard of this strategy on TikTok and YouTube Shorts and Instagram. I think the issue right now that I see on social media is that no one is actually taking their time to explain this and showing people how to implement this. And today I want to just spend 10 to 15 minutes showing how you can implement this on your business. So let's go ahead and get started. I'm going to start with a whiteboard and I'm going to slowly show you how to find comparables. I'm going to show you how you can use ChatGPT to create a lease agreement and then how you can properly code this on your QuickBooks. Okay, so let's go ahead and go to the whiteboard. Okay, awesome. Now that we're on the whiteboard, I just want to take 2 minutes and explain how this works. So on the left side, you have your business, and sorry, I'm using my my mouse, so I'm probably gonna suck at this. But on the left side, you have your property, and the right side, you have your business. So what we're doing here is the business is going to rent out your property for 14 days out of the year, right? So the business is going to pay rent to you, and you're over here, right? As the property owner, for using your property for business purposes. And we'll talk about that a little bit later. So what is that doing to your P&L? Obviously, when you pay rent, your net income goes down, right? So that's pretty straightforward. But you might say, hey, Steven, well, the net income of my business is going down, but I'm still picking up that income over here, right? Like I still have to pay taxes on rent through 1099. And the answer is no, you don't. That's where the 14-day rule comes into place. So the IRS says if you're renting out your property for less than 14 days out of the year, don't even bother reporting the income. So that's where the strategy flourishes. And this is where we can use comparables to see how much we could rent out our property for. So in the next slide, I'm going to go ahead and pull up a website called PeerSpace. You can use PeerSpace as well to find comparables. You can use Airbnb as well, VRBO. I like to use PeerSpace because we can look for specific hourly rates. So let's go ahead and go to PeerSpace. Okay, now that we have PeerSpace pulled up, I just pulled up a random zip code here in the Phoenix area. And what you want to do is you want to look for comparables that obviously are similar to your property. You want to look within your zip code. You want to find a property that is similar in size. You want to find a property that has similar beds in bathrooms. Also, very importantly, you want to find properties that have reviews, okay? Because you don't want to use a comparable where no one has used that property before. That's not going to fly, excuse me, in a specific audit. So here you can see people have actually used this property. There's 6 reviews. So I would be comfortable using this comp if my house was 2,800 square foot and I was in this area. So that's an example of how you can do this. So you want to find at least 3 to 4 comparables so you can get an average. Other than that, that's PeerSpace. You can use Airbnb as well. Again, I like PeerSpace because you can get the hourly rate. So now that we find 3 comparables next to our zip code, let's make sure to get an average of that cost per square foot. And I'll show you that in the next slide. Okay, awesome. So I built this spreadsheet and I pulled up 3 random locations. And we have the club room here. We have a modern, bright, and stylish and single California coastal ranch. What we're doing here is we're pulling the average hourly rate of $175 and we're multiplying that times 8 hours per day because we're going to assume that we're using this for 8 hours for the day. So for this, we have 1,400, 2,000, and a little bit over 2,000. So on the square feet, we add the square footage of the comparable, not our property. So make sure this is the property of the comparable. And then over here, we divide the full day cost over the square feet, and that gives us an average cost per square foot. So now we have that for 3 comparables, and we're gonna take the average of that. So that would be about 90 cents per square foot. Down here, we're going to add our home details. So for example, let's say I have a 2,800 square foot house, and the cost to rent my house for 8 hours is going to be this average over here, right? So we're going to take the 2,875 and we're going to multiply it times 90 cents. And that equals about $2,500 to $2,600 per day. Then we're going to multiply that times 14. And the total amount that we could rent out our primary residence to our business for the full year is about $36,000. Okay, so let's go back to the full screen real quick. So that is a simple example of how you can use comparables and this Excel spreadsheet to find how much you could rent out your property for. Now, I want to pull up my tax software to show you exactly how that translates into tax savings. So let's pull that up. So we have two scenarios here. On the left side, we have the tax year 2025 sample. This is a made up client. And then on the right side, we have the tax year 2025 with the 280A strategy. So where is that going to appear on your tax returns? So if we keep scrolling down, it's going to appear on our Schedule E. So you can see on the left side over here, we have about $131,000 in net income. So this is your S corporation. So this assumes that you have an S corporation or a partnership. If you're a Schedule C, this is going to be a little bit different, which I'm happy to make another video for, but this assumes you have at least around $100,000 in net income and you have an S corporation. So with an S corporation, you're going to have business income, which is through your K1, and then your K1 goes directly to your 1040. That's where you're going to report the business income on your Schedule E. So right here, this business generated about $131,000. As you can see, we have some strategies here for this client, but we don't have the Augusta Rule. On the right side, here's a scenario where we applied the Augusta Rule. So you can see, here's the $36,000 expense. So how does that translate into tax savings? So let's go down here and see how much that saved us in taxes. So you can see for federal, that saved us about $8,000. And depending on the state where you're in, it can save you about another $1,000. Depending if you're in California, that can be a little bit more. But overall, you can see implementing this strategy can save you approximately $9,000 for this specific person. Next, I want to talk about the requirements in order to implement all of this to make sure you're buttoned up. And if the IRS were to audit you, you have proof, comparables, and a lease agreement. So next, I just want to go over the lease agreement, and you can honestly use a ChatGPT prompt. So here I just said, hey, create a lease agreement for purposes of Section 280A between me, the property owner, and my business, the renter. The agreement will be for 14 days out of the year. So you can mess around with this. Again, I am not an attorney. So if you want an attorney, go ahead and hire one. But I feel like ChatGPT does a pretty good job, and you can use this template. Make sure you sign this between you and yourself, both the business owner and the person who's owning the property. One last thing is you want to make sure that you log all your hours. So you can use a basic Excel spreadsheet where you log 14 days out of the year, and you want to make sure you add the date that you use your property and the purpose. So make sure you have those two things. You can use a very basic Excel spreadsheet. Again, it can have 4 line items on it, 4 line items for every 14 days out of the year. So make sure you have that every single year. Number 2, make sure to have that lease agreement signed, as we spoke about before, where I showed you the ChatGPT lease agreement. And lastly, for number 3, make sure you code this right on your QuickBooks. That's the biggest mistake ever, where sometimes you'll take a distribution from your business account. Make sure, and this is probably the most important part of the video, is that when you take that distribution from your business bank account to yourself to pay rent, make sure you code this as a rental expense, not an owner's draw. Okay? So hopefully this is useful. Let me know if you have any questions. And again, if you found this video useful, make sure to like and subscribe.